Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Previous videos, two videos, I have completed the short problems on financial statement analysis. So we have done the short problems on comparative statement, common size statement and trend. Now in this video, I'm going to start the main problems, long problems on financial statement analysis. So the main problems, the first three problems I am going to explain you in this video. So if you want the perfect knowledge, watch the video till the end. Don't skip in between and don't join in between. And without understanding the theory, don't directly come to the problems. I suggest you to watch completely the theory, be acquainted with the methods of preparing the financial statement analysis, and then only you come to this video. So if you have not watched, go to the playlist of my channel, select the subject financial decision making, select the video financial statement analysis, watch the first video, be thorough on the technique, then you come to this video. Now before starting the main problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Take the screenshot of the first three problems, then I'll explain. Come on, first main problem. From the following statement of profit and loss, prepare common size income statement. So here we have to make only common size income statement. Yes, limited. Statement of profit and loss for the year ended 31st March 2017. So only for 1 year income data is given. That is profit and loss account is given. So here particulars, revenue from operations 4 lakh, other income 1 lakh. So total income 5 lakh, total revenue. Expenses, cost of material consumed, employee benefit expense, other expense. Total expenses 3,36,000 and net profit is given 1,64,000. So complete information is given regarding the income statement. Now how to prepare the common size income statement? See here. So common size income statement for the year ended 31st March 2017. Two columns at the extreme right hand side. Amount column and percentage column. Right? So whatever information is given in the problem, same information I have copied here. So here revenue from operations 4 lakh, other income 1 lakh, total income 5 lakh. Expenses, cost of material consumed 2,40,000, employee benefit expenses, other expenses, total expenses 336. Net profit A minus B, revenue minus expenses 1,64,000. This is the data given in the problem. Now for making common size income statement, we take revenue from operation as the base. So how much is the revenue from operation? 4 lakh. This 4 lakh we make it as base and take the percentage as 100%. Now we express all these values as a percentage of revenue from operation. That means these values should be taken in numerator and 4 lakh rupees should be taken in the denominator into 100. For example, other income is 1 lakh. So 1 lakh divided by 4 lakh into 100. So 1 divided by 4 into 100, you will get 25%. Similarly 5 lakh. 5 lakh divided by 4 lakh into 100. 5 divided by 4 into 100, you will get 125. That's it. Now cost of material consumed 2,40,000. So 2,40,000 divided by 4 lakh into 100, you will get 60%. Then 72,000. So 72,000 divided by 4 lakh into 100. You will get 18%. Then 24,000. So 24,000 divided by 4 lakh into 100. You will get 6%. Now 3,36,000. 3,36,000 divided by 4 lakh into 100. You will get 84%. You can add up and see whether it is correct or not. 60, 70, 84%. Right. Last one 1,64,000. 1,64,000 divided by 4 lakh into 100. You will get 41%. That's it. So now you can confirm whether our calculations are correct or not. 125 minus 84, you should get 41. Check. 125 minus 84 is equal to 41. That's all. This is the common size income statement, taking revenue from operation as the base, 100. That's it. This is the end of first problem, first main problem. Now I am going to start the next second main problem. Prepare a common size income statement for the following information pertaining to Aparna Limited for the year ended 31st March 2015. That means we are given 2 years data, 2014 and 2015. Last year 2014, current year 2015. Comparative data is given. Revenue from operations, cost of material consumed, employee benefit expense, finance cost, depreciation. So all these are the expenses. Cost of material consumed, employee benefit, finance cost, depreciation. These 4 are expenses. And revenue from operation is the income. So income minus expenses, we will get profit before tax. So next page it is given tax is equal to 50%. Tax rate is 50%. From this information we are required to make the common size income statement. Now Aparna Limit, see here. Aparna Limit common size income statement for the year ended 31st March 2015-2016. So 2 broad columns we make. First column 2014, second column 2015. In this broad column, 2 sub columns we make. Amount, percentage. Here also amount, percentage. First of all, whatever the amounts are given, that will take up. Afterwards, we calculate percentage, right? Income. Only one income is the revenue from operations. So revenue from operation last year 25,000, current year 40,000. Given in the problem. Same thing I have taken. Now A is the total. Now expenses. Cost of material consumed, employee benefit expenses, finance cost and depreciation. These are the 4 expenses. And respective amounts I have taken for the last year and current year. The total expense are 21,000, 32,000. That's it. Now, income from operations. That means profit before tax. Profit before tax is total of income minus total of expenses. How much is the total of income here? 25,000. Total of expenses 21,000. So 25 minus 21 is 4,000 profit before tax. Similarly 40,000 minus 32,000, 8,000 is the profit before tax. This is the profit before tax. It is given in the problem the tax rate is 50%. So from PBT we are deducting the tax. 50% of 4,000, 2,000. 50% of 8,000 is 4,000. Now subtract 4 minus 2, 2,000 is the profit after tax. Here also 8 minus 4 is 4,000, profit after tax. That's all. So whatever data is given in the problem, I have taken in this format. Now I have to calculate the percentages. It is the common size income statement. So again, revenue from operation should be taken as 100%. This is revenue from operation. This is 100%. This 25,000 is 100%. So here also I am writing 100. Right? Now express all these values as a percentage of 25,000. So these values should be taken in numerator and 25,000 should be taken in the denominator into 100. So 10,000. 10,000 divided by 25,000 into 100, you will get 40%. Similarly 6,000. 6,000 divided by 25,000 into 100, you will get 24%. Then 2,000 divided by 25,000 into 100, you will get 8%. Then 3,000 divided by 25,000 into 100, you will get 12%. Last one, 21,000 divided by 25,000 into 100, you will get 84%. Now you check after adding this, you must get 84%. So 40, 50, 60, 70, 80, 84%. That is right. Our calculations are right. Now 4,000. So 4,000 divided by 25,000 into 100, you will get 16%. Then 2,000 divided by 25,000 into 100, you will get 8%. Last one 2,000, same 8. 16 minus 8 is 8. Over. So we have calculated the percentages for 2014. Same way we have to calculate the percentages for 2015. So 2015 revenue from operation is 100%. Here also take 100. Now take all these values in the numerator. So 15,000 divided by 40,000. 15 divided by 40 into 100, you will get 37.5. Then 10 divided by 40, 10 divided by 40 into 100, 25%. Then 2 divided by 40, 2 divided by 40 into 100, you will get 5%. Then 5 divided by 40 into 100, 12.5. Then 32 divided by 40 into 100, you will get 80%. Now confirm whether this 80 is right or not. You add up these 4 items, 37.5 plus 25 plus 5 plus 12.5, 80%, right? Our calculations are right. Now 8,000. 8 divided by 40 into 100, that is equal to 20%. Then 4 divided by 40 into 100, that is equal to 10%. Here also 10%. That's all. So we have completed the income statement, common size income statement, these 2 problems. So hope you are perfect in making the calculations for common size income statement. Now next problem, you see problem number 3. Third problem. Convert the following statement prepared by an analyst into common size statement and interpret the changes in 2017 in the light of conditions of 2016. That means we have to make the common size income statement for 2016 and 2017. We have to compare it and give the interpretation. Previous problems, it was not asking interpretation, that's why we have not given. But here specifically it is asking you to calculate and interpret. So after making the calculations of common size income statement, we are going to give the interpretation. So 2016-2017, the data is given: gross sales minus sales return, net sales minus cost of goods sold. So whatever format is given in the problem, same format I have copied. And the values, whatever is given there, the same values I have taken. Only the thing is, I have calculated the percentages. Percentages are not given. The values are given, format is given. So same format. Common size income statement for the year 2016-2017. So 2 broad columns at the extreme right hand side. Then sub columns, amount percentage, amount percentage. The format is given gross sales. The gross sales last year 30,600, current year 36,720. Less sales return, last year 600, current year 700. Subtract, will get the net sales, 30,000, 36,020. Minus cost of goods sold, 18,200, 20,250. Subtract, will get gross profit, A, 11,800 and 15,500. Don't calculate the percentages right now. Right now, whatever amounts are given, simply take all the amounts. All the amounts. So whatever format is given, exactly same thing I have copied. Same amounts I have taken, right? One more printing mistake is there. In this third problem, last one, non-operating expenses are given 40. It is not 40, it is 400. Make the correction there. The non-operating expenses are not 40, it is 400. So make it 400 here, right? And current year 600. Now we have to find out the percentages. It is the common size income statement. So take the net sales as 100%, not gross sales. We have 2 sales. Gross sales are given, net sales are given. So remember, you should take the base for net sales, not gross sales. So net sales are 30,000. So 30,000 will be taken as 100%. Carefully you see. 30,000 will be taken as 100%. So this 30,000 should be taken in the denominator. And numerator will take all the values. What is the value here? 30,600. 30,600 divided by 30,000 into 100, you will get 1 or 2. 600 divided by 30,000 into 100, you will get 2. Then this is 100. Then 18,200 divided by 30,000 into 100, 60.67. 11,800 divided by 30,000 into 100, 39.33. Like that. You have calculated all percentages. Same way we have to go for 2017. 2017 net sales are 36,020. 36,020 should be taken as the base. So this is 100%. 36,020 is the base, 100%. Now this should be taken as the denominator. Numerator, 36,720 divided by 36,020 into 100, 101.94. 700 divided by 36,020 into 100, 1.94. Then 20,250 divided by 36,020 into 100, 56.22. Like that you have to make all calculations as usual. Now, we are also required to give the interpretation from these calculations. So how to give the interpretation, you can give in your own words. The only thing is you must know the logic, how to make the interpretation. First interpretation should be given regarding the gross profit. What is the percentage of gross profit here? 39.33. For every 100 rupees of sales, 39.33 rupees is the gross profit last year. Now current year, for every 100 rupees of sales, the gross profit is 43.78. 100 rupees sale, 39 rupees. And current year, for every 100 rupees sale, 43 rupees is the gross profit. The first conclusion, the gross profit percentage has increased. This gross profit percentage has increased because the cost of goods sold as a percentage has decreased. Last year, the gross profit was 60.67%. That means for every 100 rupees of sales, 60.67. That is the cost of goods sold. Current year, for every 100 rupees of sales, 56.22. So last year 60.67, current year 56.22. So due to decrease in cost of goods sold, the gross profit have increased during the current year 2017. First conclusion. Second conclusion, come to income from operations. Here income from operations. Last year income from operation 9.33%. For every 100 rupees of sales, 9.33 is the income from operations last year. And current year it has become 16.02. From 9% to 16%. That means current year income from operations have increased. Why this increased? Because the expenses have decreased. Last year total expenses are 30%. For every 100 rupees of sale, 30 rupees are the operating expenses. But current year it has come down to 27.76. For every 100 rupees of sale, only 27.76 is the operating expense. Due to lowering of operating expenses, the income from operations have increased. Second one. Now third one. There is marginal change in non-operating income and non-operating expenses. You see, non-operating income last year was only 1% and current year 1.11%. Small change in non-operating income. Similarly, non-operating expenses last year 1.33, current year 1.67. Slight change in non-operating expenses. So there is no significant change in non-operating income and non-operating expenses. Finally, net profit. The net profit last year was 9%. For every 100 rupees of sale, 9 rupees is the net profit the company got in 2016. And 2017, the net profit is 15.46. For every 100 rupees of sale, 15.46 is the net profit current year. So comparatively, last year 9%, current year 15.46%. Now final conclusion. By calculating all these percentages, we come to know that the profitability position has improved in the year 2017. The profitability is satisfactory. This way you have to give the interpretation. Here I have written the interpretation. Whatever I have explained, that should be your interpretation. You can write in your own words. The only thing, logic. First, give the interpretation regarding GP. Second, give the interpretation regarding income from operation. Third, give regarding non-operating income and non-operating expenses. Lastly, give the net profit, then conclusion. That's all. So this is the end of first three main problems on common size, that is financial statement analysis. Inshallah, the next problem will continue in the next video.